And we're back with you to take a look at your ag commodity trade on a Monday as we are off and running in our ag markets on a full trading week here. I'm Marlin Bohling, joined by my sidekick for the time being, Mr. Chris Swift. How you doing?
Doing great, Marlin. How are you this morning?
Doing fine. Thank you for coming in. Chris is with Swift Trading Incorporated. He's based in Nashville. So let's go ahead and take a look at our grain trade.
Absolutely.
See what excitement there is waiting for us here. All right, let's go ahead and go to the big board here. Here we have the corn market right now. Boy, this is truly exciting, Chris. We have September 1/4 cent higher at 355.5, just up 1 tick. December 2 ticks higher, 1/2 cent higher at 369.5. So not a lot going on there right now. If we look at the soybean trade, let's take a look here at the August contract. It is now 2 3/4, I should say, higher at 852.5 per bushel. And we have the new crop November contract now at 868. And that is up 3 1/4 cents so far on the day. Now, we had a high overnight, I might add, of 870, so it did come back off that by a couple of pennies. In fact, when we opened things up, it was the corn that was a little bit higher, and the soybeans were flat. Now they're kind of turning around that situation here. Now, on the wheat trade, we have Chicago wheat about 2 higher on September. It's trading at 518. Well, it did get up as high as 522.5 early this morning. On the Kansas City wheat market right now, we have September up 4 at 512.5, and that is still 2.5 cents off of its earlier high from overnight. And the Minneapolis trade, when it opened up, it was about 9 higher. Right now, we are trading 6 3/4 higher, now 7 1/4 higher at 562.25. So by far the most strength anywhere in the grain complex, Chris, is seen in the Minneapolis spring wheat trade. That's kind of intriguing.
It is a little bit, but
and that's where they have the really good crop ratings too.
It is excellent crop ratings, but I think wheat in general is starting to finally, realize that it probably is underpriced compared to the amount of demand that we've got for it. So it's not surprising at all to see wheat start to pop back up again a little bit.
I was reading over the weekend where wheat, they say, took out some overhead resistance, kind of leapfrogged over it. Is that right?
Yeah, about 3 weeks ago, we had a lot of sideways congestion trading, and then market broke lower, set new lows, and has come back up and exceeded all of that congestion that we had a couple of weeks ago to the upside. So, yeah, it looks like a little bit of a reversal right now on the charts.
On the corn, I think it took out or went up above its 20-day moving average, which they said would be a little bit encouraging if it would hold that. Is that right?
And the corn crop is really good. I think we're starting to lose a little bit of how good the crop is. Our crop ratings have started to shrink just a little bit, and we now hear some detriments to the corn crop, not a lot, but a little bit, that more likely than not just keeps it from going back into a bear market.
Still looking for tighter stocks on the corn?
Yes. Demand's heavy.
Right. Yeah. So they're going to have a really good crop regardless, right?
Exactly. We're going to need every single bit of it that we grow. Sure will.
Okay. All right. Something to keep in mind. I do want to take a look at cotton here for a second. Let's go ahead and take a look at our cotton board. Currently, the new crop December contract is trading 37 points lower at 86.71 cents per pound. So it has come off of its recent highs, that's for sure. We'll come back in just a moment, and Chris and I will take a look at our livestock trade on the other side of these messages. Come on back. And we're back with you to take a look at our livestock market action here this morning. I'm Marlin Bohling. I'm joined by Chris Swift of Swift Trading in Nashville. Now let's open up our live cattle trade, shall we?
Lots of information from Friday.
Absolutely. We had the cattle on feed report and the cattle inventory report. They both came out Friday afternoon. I think on the surface, most analysts said it'd be kind of maybe a little bearish, maybe neutral to bearish.
The numbers came out as anticipated. If there was anything really to carry out from it, was probably the inventory number of heifers kept for breeding. It was down to 98%, and that shows you that, well, that's probably not liquidation, that is heavy contraction. And then we noticed that on feed numbers, the placement part of that was very heavy towards the light end of it. More likely than not drought cattle, but in the 7 to 8 and 8 to 9 weight categories, they were both lower. So.
Okay, let's take a look at reaction here. Let's go to live cattle here right now and take a look on the big board. We currently have the August contract down 37 and 108.55. We've been all over the place here. Looks like it's toward the lower end of the trading range right now. Now we're down 40. Had actually gotten as high as 109.40 there, Chris. The October contract down 15 at 110.10 at the present time. and December back to unchanged at 114.20. So we've been on both sides of unchanged here, kind of deciding which way it wants to go. Now on the feeder cattle side, here you have the nearby August contract currently down about 48 cents at 153.20 now, and you have September currently down $0.50 in value at 154.05, right in the middle of our trading range of the day. By the way, the far out deferreds that you were talking about are just a touch higher. Lean hog trade, this is the one that has been making numerous new contract lows here recently, and we are down on the, we're higher by 27 on the August. We're at 66.72. December now up 116 at 47.08. Finally, signs of life in the hog trade here. Is it grasping at straws?
Well, I don't think so. You know, basis is elastic. It can stretch back and forth and go positive and negative, and that is a extremely wide basis spread between the index and December futures. So we're taking a lot of pork on the chin and going to say that fourth quarter production is still going to be relatively high. But now that the futures have already anticipated that by close to $32, be interesting to see how it converges back.
So when we talked about the cattle market, am I right in saying that it had been up against overhead resistance here recently?
Quite a while. Yeah,
on the chart?
Both fats and feeders have been bumping their heads up against these levels, right around 153, 154 for the feeder cattle, and right around on the August contract, 107 to 108 on the August fat cattle contract.
So it can't keep that up forever when the lean hogs are making new contract lows because they're competing meats at the retail counter.
Well, it can probably stay discombobbled for much longer than what you think it might be able to. So it's always strange. The markets can remain irrational for longer than you can remain solvent. So
interesting.
They can remain irrational like that for a while.
Sounds like the voice of experience.
I've been there once or twice.
All right. Well, Chris, thank you so much for coming in. Appreciate it. Always a pleasure to visit with you.
Yes, sir.
Chris Swift of Swift Trading Incorporated. He is located right here in Nashville.